Hi, sir. Afternoon. Thanks for joining in. First, could you walk us through the strategy for increasing your branch expansion and, upping your employee base by 50 to 60%? What prompted it?
Well, I think, DCB has been showing steady growth quarter by quarter, and we hope to repeat that as we go forward. But I think with the competition intensifying, we need to expand our presence throughout the country. And we took a call that we need to accelerate the pace of our network expansion while keeping the business model exactly the same. We're not changing the business model at all.
Okay. Mr. Nasser Munjee, good afternoon. Thank you very much for joining. That is exactly the point. It is the increase in branch count and head count that you are using as the instrument to meet more banks that will be in the fray. That will willy-nilly bring down your ROA and bring down your margins, won't it? What are your own expectations in terms of impact on margins, impact of cost to income over the next 24 months?
Look, this is a call we have to take for the future development. I mean, one option is that we do nothing. We stay and we grow at 25, 30 branches a year and keep that growth. I do not see that as a viable strategy. I think what we need to do is up the ante a little bit. It will affect cost of income ratio as we move forward. Obviously, we're being imposed costs on ourselves. But the business development can only come through branch network. It's not coming through corporate lending. We are a retail bank, and it's got to grow. That presence is an investment that we're making. There will be impact over the next year. So this year we're okay, but next year there will be impact. But that's an investment we've taken a call to make.
Okay. Mr. Munjee, you have guided in your press release that your return on equity as well as your return on assets are going to decline over this certain period. If it stands currently at 8.92 and 0.89% respectively, how much lower do you think it can go, and where will it sustain up till, say, FY22?
Well, it depends. Obviously, if we are going for this expansion and our capital calls maybe towards the end of the next year, it's going to affect ROA and return on. But this is an investment that we have to make for our future.
Okay.
I don't think we have an alternative.
By how much?
Well, it's hard to tell at the moment.
Okay. Well, Mr. Munjee, I would assume that you're responding to the competition that will come not just from the two new banks. I mean, Bandhan and IDFC really will not be a challenge as much as payment banks, which are being parented by people with very deep pockets and huge telecom networks.
Yes.
Exactly what is the challenge? You expect they will take away your CASA?
Well, obviously, CASA is a very critical element. Deposits is a very critical element of any bank. Plus, it's a good opportunity for us to come to a different level in terms of geographical outreach. We have experience. We know where things work. We know exactly how to set up branches, on what basis to set up branches, and how we can estimate our break-evens as well as products. All our branches are full product branches. It's not that we're just looking at one or two things. It's a full product branch. So I think that model will be unfolded as the year goes by. Now, if we find there's some problems, we can always pare back if we need to. There's flexibility. There's nothing sacrosanct about 150 branches. But I think we will. The intention is that we need to roughly double the network over the next 12, 15 months. It depends on how well we can do it.
Okay.
But Mr. Munjee, even if you double from 150 to 300, that still will not quite answer the kind of competition you're getting from the telecom networks.
Yes, but you know, the point is, what is the option?
No, exactly.
Is,
yeah, that was my question, really. Would you want to liaise? Would you want to ally with any of the...
No, we don't. We at the moment, there are some who have talked to us. There's certainly possibilities of alignment, which we are exploring. But that does not take away from the fact that we need, we can have a lot of synergy that comes in as well. So there are lots of possibilities and opportunities, and we're not keeping any options closed.
Okay. Would you need to raise funds in the near future to fund this expansion strategy?
We don't see that until end of next year.
Okay. And how much is the entire expansion going to cost up till, say, FY18 on?
I don't have that exact number on the tip of my fingers at the moment. But we're talking about what? Well, no, I can't give you a number.
Okay. Do you expect that the new payment banks and even the new banks, IDFC and Bandhan, and the small banks offer more by way of savings rate? See, that's what Kotak and Yes did and still do. Do you expect the new guys also to offer more in terms of savings rate, in which case you may also have to raise?
No, we will not raise. Kotak raise, these others may raise. They offer interest on current accounts. We will not. We know we've faced the competition. We've grown substantially on our CASA base without increasing rates. And that is what the branch network allows us to do.
So the branch network is to get more retail money and lend more retail loans?
Absolutely. Absolutely. That is our business model.
But if you can wear your hat as a financial expert rather than just the DCB chairman, Mr. Munjee, do you think there has to be a lot of consolidation in the mid-cap banking space? I mean, SBI would have survived anyway. They have actually allied with RelGeo. ICICI perhaps would have survived anyway. They still have a Fino. And Airtel has some kind of alliance with Kotak. The point is, a lot of the big boys are trying to find their own allies. Do you think the mid-cap space, whether public sector or private sector, has to see consolidation?
I've never bought that idea, quite honestly. The United States had 3,000 unitary banks all over, and there's a community bank structure, and community banks know their communities better than any of the big boys do.
But you're not a community bank, Mr. Munjee. You're all over the country. I mean, in many parts of the country.
When I say community bank, certainly. So the point is, our philosophy is to work in certain clusters, and we work in those clusters, we understand those clusters, and we create those clusters. And I think there's enough opportunity for smaller banks to be very vibrant and very innovative in the way we do it. Technology helps enormously. So in a sense, a combination of physical presence and technology can leverage off physical presence in a very big way.
Okay.
So I don't buy that argument.
Okay, Mr. Munjee, I don't mean to put you on the spot, but we've seen 2 downgrades come in from the analyst community this morning. Do you think that it might just be in the investors' best interest to maybe scale back the expansion plan or delay it till you have more certainty or the analyst queries are addressed with more certainty?
Look, a lot of analysts, some analysts are taking a very positive view. Some have taken a negative view. I think this will be a normal reaction. Some people wanted us to grow much more aggressively earlier, which I refuse to do. So now when I say I'm going to do aggressively, they're saying, it's too much. So, there's no winning on this. We have taken a decision on the best available information we have of our capabilities, our capacity, our business model, and to see how much we can expand that space as quickly as possible. Now, that's the call we've taken. We're not retracting on it.
Okay. Are you saying that if you did not have the branches growth that you have now proposed, you will not be able to maintain this kind of loan growth and this kind of margins?
No, you will not.
Okay.
Because where do we draw? Where we draw our CASA? Where do we grow our deposits? How do we grow our balance sheet? It's not on corporate lending.
Okay.
Mr. Munjee, so then to take the growth point forward, your net interest income by the end of FY15 was about 500 crores. With the branch expansion in place in the next 12 to 18 months, what would be the targeted top line that the company is anticipating?
Sorry, in what period?
No, I'm saying once you're done with your branch expansion, we just wanted to understand that in your study, what do you model?
See, roughly, we are looking at a balance sheet size of doubling the bank in 5 or 6 years. Okay.
Okay.
So that's roughly the ballpark we're in on our present estimate. So it's not that we're speeding it up, we're not doing anything too quickly. It's going to take 5 or 6 years to do that.
To double your balance sheet.
Yeah.
Okay.
You spoke in passing about alliances. What kind of alliances were you looking at?
Look, at the moment, there are lots of opportunities. There are players who are looking for banks as partners. That sort of thing. We're not looking. We just, as I mentioned, it's an open space. We are looking and talking and looking at possibilities and potential. We will leverage our strengths as best as we can over the next 2 years.
Okay. What is your outlook, Mr. Munjee, with regards to gross NPLs? Because we do understand there were some SME accounts this quarter which were a bit of a niggling worry.
You know, the economy, as I see it, has major problems. The industrial economy and the manufacturing economy are seeing no traction at all. Now, as a result of which, we are seeing a cash problem right across the SME sector. So there's a cash flow problem. There's not a business problem. So I think we'll have to weather this storm. But I do not see, given the nature of our portfolio, I don't see I want to keep my net NPAs hovering around 1%, no more.
Okay. Can you quantify the capital call, at least, that will be required next year? If not,
I don't want to anticipate that at the moment. We know roughly what it's be, but I don't want to comment.
Okay. Your loan book mix will remain the same going forward. Mortgages will be 40%, or will you increase your corporate exposure at all?
No. Our business model, as I said over and over again, is exactly the same. We are actually running down the corporate book. The corporate books come down a bit. In the present economic space, the economic environment, I refuse to move this book forward. We see too much risks involved, and we're too small a bank to take those risks.
Okay. So what's the break-even time that you estimate for each branch?
We're looking at 20 months, 20 to 24 months.
Okay.
All right, Mr. Munjee, thank you very much for fielding all those questions and giving us an idea of what are the growth plans at DCB. Thank you very much for joining us. That's the most important voice the market wants to hear now, but this will not be the last of the small banks who are going to tell us that they have to expand.
As a survival, just for survival.
Just for survival. As Mr. Munjee said, there was no option. Ekta's question was pointed. Will you roll back in the face of this downgrade? I can't. It's not a situation as if they did it for pleasure or for just some bravado. It's a matter of survival. You cannot do without a very quick increase in the number of retail outlets, ways to reach. IDFC is trying to do that with technology, and all the payment banks are going to do that only with technology. It is serious competition. It is 21 new banks, let us remember, that will be out there in the next 12 to 18 months, and some of them are banks like the kind of competition the legacy banking space has never faced. I mean, the top 3-4 Indian telecom companies and conglomerates, the Aditya Birla Group, the Reliance Group, the Mahindra Group, are all in the fray. So, you know, it'll be a competition like the Indian banking space has never seen before, while the ICICIs and the SBIs and the HDFCs will be able to figure out a different kind of competition. The mid-cap space will have to find a reason to exist, a niche. And like the community bank that he was speaking about, which probably a Karur may be able to achieve, which probably some other banks may be able to achieve. But if they don't, then either you are a candidate for consolidation or, you know, you just wither away and then get consolidated at a lower price. But it does look like this entire lot of legacy 40 banks and plus another 21 banks cannot survive. There will be consolidation.
All right, Lata, point well taken then. And by the way, the stock is still at lower circuit, and in fact, there are close to around 50 lakh shares waiting to get sold at that lower circuit. So just watch that as well. But thanks so much, Lata and Ekta, for joining in and taking us through that entire interview. The markets, meanwhile, have moved closer towards the low point of the day, sitting with a cut of around 20 odd points. Let's slip into a short break.